Man, I'm living aspiration, cutting off heads, I'm straight with decapitation.
What's up, y'all? I'm back with another one, and I'm happy. I'm feeling good. And what I wanted to talk about today was the focus on being, and I wanted to talk about this for a long time, the difference between investing and speculation. And I've been wanting to do this because I got a vent. Everybody always reaching out to me saying they investing, and then I want to hear about it. You tell me about it, and I'm listening, and I'm like, okay, you picked this, you picked that, okay. Why did you pick it? And all I hear is about, I think the stock price is gonna go from here to here to here to here. No judgment, but that is not investing. That is speculating. And a lot of people, and I'm seeing this on social media, a lot of people are encouraging you guys to speculate, not to invest. There's a big difference. And I'm an investor. You talk to me, I'm about investing. And I'm gonna let you know the difference between the two. Because speculating is something I don't do, so I can't help you with it. And for many of us, the average individual, you don't want to speculate. If you want to speculate, you go to the casino, you go gamble and do those kind of things. But when it comes to trying to build wealth, you need to invest. It's not about speculation. And with the stock market, it feels like this foreign thing, It's just about prices going here and here, and it's not. So this is a video I wanted to do for a while. So let's start off with the difference between investing and speculating. So what is speculating and what is investing? So to me, the biggest difference between, and there's a couple of differences, but the biggest difference is the concept, the mindset between investing, right? And we'll get into durations of time, we'll get into the philosophy of it, and etc. But when you're investing, right, when I'm thinking of investing, it's me doing an analysis, right? I'm doing my research. I'm looking into the business, because we're talking about stocks. A stock price is based off of a business, right? So I'm doing my research on the business, right? And from doing my research on the business, I figure out how much it is worth. And in another video, I talk about it, that is called Intrinsic Value. That's the basis of the intelligent investor and what we call value investing. So I find out the value of the company based off of where it currently is, and that goes through looking through its 10K, and the 10K is the company's annual report. You can find things like the company's balance sheet, their assets, their liabilities, shareholders' equity, how many stocks are outstanding. You can figure out all that stuff. There's also their income statement, which tells you all the revenue that they bring in minus their expenses, right? Which gives you the net income that the company brings in, and it shows you previous years as well. So you'll be able to find all of this. You'll even find what the company really does, because sometimes we think we know what a company does, but we really don't. And it has it all spelled out in a company's 10K, right? And every public company trading on the stock market has a 10K, so I encourage you to look through it. But that is what us investors do. We do our research, and that translates to real estate, other investments as well. Investors do their research before even committing to it. So from there, we find the value of the business, right? We find out how much it's really worth. And from there, we'll look at the stock price to see, is it above what it's really worth? Is it below what it's really worth? Because now we have a basis to what the stock price is, right? It's when you know the value, you look and you're like, okay, that's way too much, I'm not paying that. Or you'll be like, oh, that's at a discount, right? And if it's in my margin of safety, right? And margin of safety is just figuring out how much the company is worth. Obviously, we'll never be 100% accurate with it, but you can have a very, very good estimate or projection of what it is worth. So you'll figure that out, and then from that, just in case, because we know it's not 100%, we call this thing margin of safety. So you want to buy it at a discount below the price that you figure out is worth to give you room for error, that margin of safety. So based off of that, I'll look and be like, oh, okay, it fits within it. There we go. It's a great company, and you want to make sure it's a great company, right? That you can own this company for a long period of time, because investing takes time. Building wealth takes time. It's not an overnight thing. And that's the difference, is thorough research to figuring out, okay, bet, this can get me a return because I've done my research, I gave myself the margin of safety, I did all of these things. This is a great investment, let's do it. Difference. Speculating is just buying into a company because you see the stock price going up and down, and you're trying to buy it when it's down so you can profit when it gets up. Speculating. You have no basis to why you're buying into this company. I was going to use investing, but it's not investing. Why you're buying into this company besides the fact that you think the stock price is going to go up. That is gambling. That is not investing, and that is what majority of people do, and what majority of people are trying to get you to do. You cannot, and let me say this, you cannot build wealth doing that. You can get lucky here and there. You might have a few wins here and there, but you can't sustain that. That is gambling. There's nothing there. There's no basis, and that's what a lot of people do. And if that's something you're into doing, then by all means. But for people that are really trying to figure out how to build wealth, how to reach their goals that they have in their life, you need to be able to invest. And like I say all the time, if you are not a do-it-yourself person, please find somebody who does. I'm somebody who does. If you want, come reach out to me. I will be glad to help you. If not, find somebody who can help you. But that is the nature of investing, right? Versus speculating. And because a lot of people be like, hey, I just bought, I don't know, BlackBerry. I saw the stock price going up, and I think BlackBerry, it might have a comeback. Okay, I'm going to buy it. Because they see that it's been at all-time highs all of a sudden. But you don't know how much you don't really know what BlackBerry's doing. You don't know if they're even profiting at this current moment. You don't know what they've been investing in. You don't know you don't know anything about their current situation to just buy into the price. You're just hoping that you can sell your stock at a higher price. That's it. It's the same thing with real estate, right? Not looking into the location of your property, the value of your property. You're not looking into any of those things. You're just buying in the hopes of a gain, and that's how a lot of crises happens, right? Real estate, etc. You're just gambling, and that's not what we do. That's not what I do. So that's a big thing. The philosophy, the mindset between the two. Another one is long-term. Investing is a long-term thing. It's understanding that wealth takes time. It does not happen overnight. Check billionaires, right? Check Warren Buffett. Check when he really became a billionaire. Check Jay-Z. When did he become a billionaire? Check anybody, and you'll see that it happened over periods of time. It was not an overnight thing. So when you're buying into a stock, right, when you're investing into it, you're aware of the long term. You don't mind holding it, right, because you know the return that you're going to be getting. It's a big difference, right? Speculating is short term. You're just trying to flip it as fast as you can. You're not looking to hold on to it for a long period of time. As soon as the price goes up, you're selling it. That's it. There's nothing else to it, right? Just in the hopes of the fact that you can get it at a higher return, a higher price than you paid for it. That is it. And that's a big difference between investing and speculating. Investing, longer duration. Speculating, short term. And that's a major key between the two, because when I look at buying into a stock or a company, I want to hold that for long term. Warren Buffett talks about that. I want to be able to invest in this company and hold it forever, right? I want great companies that will be there for the sake of time, that that I can hold that for a period of time and just keep being rewarded with my dividends and my capital appreciation. Right, that's what I like to do, buy and hold strategies. And if you are a client of mine, that's what I emphasize, buy and hold strategies. So speculation, short term, you're not into that. You're not into holding. You just, like I said, flipping off stock price. And that brings me to a bigger picture of it all, that a stock price is just how much people are willing to pay for it at a current moment. That's all the stock market is doing. That's what the stock price is, how much people are willing to pay at that moment. But like I just said in the beginning of the video, there's a price, there's an actual value of the company. And now the price starts to make sense once you know the price of the company. It's no longer just random numbers. So please, if you are not, especially if you're not, and to mitigate a lot of risk that we take on, it can be done with a thorough analysis. You'll never be able to forego 100% risk. It's not possible. But with thorough research, if you're a do-it-yourself person, if you have an advisor, if you have a portfolio manager for you that is qualified, then you'll see that with thorough analysis you can mitigate a lot of risk that you take on. Speculation is very risky, highly risky, and for people that have a low risk tolerance or who can't just afford to be losing money off of straight chance, then speculating is not for you. That is not it. So I just, I'm hoping this clarifies a lot of the difference between the investing and speculation point of view. So another thing with it as well too, did this in another video, with being able to invest instead of speculating, you also have plenty of benefits in your favor. You have a lower tax rate when you hold it for longer than a year. You get dividends, so you get passive income coming in, and you also get capital appreciation. So you get 3 ways of benefiting: on taxes, your dividends, and also having capital appreciation. When you are speculating, the only thing you are getting is one source of income, and this goes into real estate too, is just capital appreciation if it just so happens to be there. Why not have 3 benefits versus 1? Another advantage to investing versus speculating. And like I keep saying, speculating is gambling, and that can be done in ample amount of ways. No matter what you want to do, if you are somebody like me, you're building wealth, then you need to understand that you can't build wealth speculating, and that a lot of people that you're listening to on social media that are pitching to you, not saying everybody, but majority of what I be seeing on there is people trying to get you to speculate. There's no benefit to you, and yeah, so that sums up the difference for me, short version of investing versus speculating, and I hope it helped clarify some things for you all. And if you have any questions, please reach out to me. As always, my website will be in the description below. On that, you can find my financial advisory firm, and from there you can learn about everything about the services I offer, how much the fees are, etc., and schedule an appointment. So until then, I'll talk to you all next time. I'm out.
When it's time to ride, I never crash like Susie. Lyrics make you woozy, inspired by Juicy. The way to branch out is to kill all of these loose